expand our footprint, we remain focused on tapping into strategic opportunities. A key development during the quarter was the opening of the first food court in Kota, established under the JV arrangement with PVR Inox. Our international team also contributed to the overall growth of the company. In Thailand, we successfully added 9 net new stores, totaling to 305 stores Q3. To conclude, I'm glad that despite a relatively quiet festival season, DIL has remained focused on store expansion while continuing to explore new and innovative ways to connect with consumers. As a leading player in the Indian QSR space, we are uniquely positioned to capitalize on the sector's recovery, with market conditions expected to turn positive. In the coming quarters, we are confident that our efforts, having doubled our store count to 2,000 in just over 2.5 years, will yield strong and further strengthen our position in the industry. With this, I would like to conclude my address and now hand over to Manish for the financial highlights. Thank you.
Thank you, Mr. Jaipuria. Good evening, everyone. A very warm welcome and thank you for your valuable time for attending DIL's Q3 and 9 months FY25 earnings conference call, our 14th such call since our listing in August 21. DIL has achieved a significant milestone of 2,000 stores in Q3 FY25, ahead of the guidance given in the past. The total store count at the end of the quarter stands at 2,032 stores. Our core store footprint has now exceeded 1,900 stores, comprising of 1,052 KFC stores, 651 Pizza Hut stores, and 209 Costa Coffee stores. The operating revenue for Q3 FY25 was rupees 1,294 crores, representing a growth of 54% versus Q3 FY24. The current year numbers include the Thailand business, which was acquired in January 24. The Indian business witnessed a growth of 9.6% year-on-year, mainly due to store expansion. Revenue was rupees 873 crores, with growth of 4.4% versus the previous quarter. The gross margin for the consolidated business was 68.7%, a drop of 60 basis points versus the previous quarter. The impact on gross margins was primarily due to food inflation that we've seen in core brands, driven by rising oil, chicken, cheese, and coffee bean pricing. The brand contribution for Q3 FY25 stood at 14.3%, higher by 70 basis points versus the previous quarter. Improvement in brand contribution was mainly on account of sales leverage and fresh measures on cost optimization in the Indian and Nigerian operations. Consolidated operating EBITDA on a pre-Ind AS basis was rupees 131 crores versus rupees 114 crores in the previous quarter. The pre-Ind AS margins for the quarter for the consolidated business were 10.1%, an improvement of 70 basis points versus the previous quarter. The consolidated reported EBITDA on a post-Ind AS basis was 16.9% versus 16.3% in Q2 of FY25. The Nigerian currency is showing signs of stabilization and broke its continuous weakening trend in Q3. The PBT for Q3 FY25 on a consolidated basis was rupees 9 crores versus a loss of rupees 4 crores for the previous quarter. The improvement in PBT is primarily on account of better EBITDA. Moving the discussion to our core brands, KFC in India added 44 new stores in Q3 FY25. With this, the total store count for KFC in India stands at 689 stores at the end of Q3 FY25. Average daily sales for Q3 FY25 was flat at 96,000 versus the previous quarter. Revenue at rupees 570 crores increased by 4.8% on a quarter-on-quarter basis. Gross margin for KFC during the quarter was 68.6%. The brand contribution margin at 17.2% for the current quarter saw an improvement of 60 basis points because of better sales leverage and cost optimization measures. During the quarter, Pizza Hut added 51 new stores, reaching a total count of 644 stores in India. Revenue for Q3 FY25 was rupees 190 crores versus rupees 185 crores in the previous quarter. ADS for the brand was 35,000. Gross margin for the quarter was 76.2%, and brand contribution for the quarter was rupees 4 crores with a margin at 2.1%. Costa Coffee added 2 new stores during the quarter, reaching a cumulative store count of 209 stores. Q3FY25 revenue was rupees 52 crores, which grew by 5.4% over the previous quarter and 30.2% on a year-on-year basis, mainly due to expansion of new stores. The gross margin for the quarter was 75.5%, an improvement of 50 basis points over the previous quarter. Brand contribution in Q3 saw an improvement and stood at 16.9%. We opened our first food court under the strategic tie-up with PVR INOX at Kota. DIL has an economic interest of 51% in the new company. Please note that this entity shall be consolidated in accordance with Accounting Standards 28. Total number of international stores was 374 with the addition of 9 new KFC stores in Thailand and 1 Pizza Hut store in Nepal in Q3. The international revenue for the quarter was rupees 430 crores with growth of 9% versus Q2 FY25. Gross margin was 64.1%, a drop of 100 basis points versus the previous quarter because of Thailand currency impact on closing inventory valuation. Brand contribution margin at 16.6% saw an improvement of 60 basis points versus Q2 FY25. The reported EBITDA was 14.9% during the quarter versus 13.4% in Q2 of FY25. To conclude, we have been executing our expansion strategy in a very calibrated manner while ensuring healthy paybacks in our core brands. A key driver of this has been our focus on small format stores over the past few years, which are highly capital efficient and offer stronger payback potential. While SSSG performance has impacted returns in the short term due to subdued external environment, such trends are also typical during phases of accelerated expansion. Nevertheless, we remain confident that our strategy will drive sustained growth and profitability in the medium to long term. On that note, I would also like to request the moderator to open the forum for any questions or suggestions that you may have. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from Devyani from JM Financial. Please go ahead.
Hi, sir, am I audible?
Yeah, Gaurav, you are.
Hello. Yeah. So thank you for taking my question. So my first question is with regards to the store expansion that we have seen in Pizza Hut. It's been a very strong expansion that we have seen here. And I think the same is the case with the other business segment also, wherein the network expansion has been strong. So if you can highlight, your guidance for the expansion in both of these formats going ahead.
Hi, Gaurav. So Gaurav, if you look at on a 9-month basis, we've added 93 KFC stores and 77 Pizza Hut stores. While we continue to add Costa and Vaango as well. The Q3 on Pizza Hut was high because we were delaying the store openings given the brand performance. But there were some DA commitments that we had, and therefore we've kind of made sure that we fulfill our commitments. Going forward, obviously, as we've spoken in the past, we will be moderating Pizza Hut expansion, and you will see lower numbers, even further lower numbers versus what we've done so far. So we continue to remain bullish on KFC, on the other brands. We've added new brands. We are monitoring Pizza Hut performance very closely, and therefore, depending on the brand performance, we will take a final call on the numbers.
And so on the other brands, the higher expansion is also due to the JV store expansion that you mentioned, the food court. Is that also a reason why the expansion is higher in the other brands?
So we have upped the game on our food court penetration as we've been speaking about food court expansions in the last 2 quarters. But the JV has opened only 1 food court in Kota, and that is not part of the consolidated numbers because we are not consolidating this JV fully, given the auditor's opinion and so on and so forth. So if I were to take, let's say, the JV that we've opened in Kota, it will further add 4 new stores, 1 each in KFC, Pizza Hut, Costa and Vaango.
Okay. And so my last question is with regards to, the margin performance. I mean, the margin recovery is a tad better in the KFC business. However, we have seen Pizza Hut margins even declining sequentially, despite the ADS remaining flat Q on Q. So anything on why the margins in the Pizza Hut are weaker? And if also you can give a sense on how margin trajectory for KFC can trend up in the future. Thank you, and that's all.
Thanks, Gaurav. So Gaurav, on margin expansion, I agree with you that Pizza Hut has seen little lower margins, but we will see margin improvement coming from next quarter because we are going to be optimizing the marketing cost in Pizza Hut versus what we've done in the last 6 to 9 months. At the same time, we've taken some fresh cost optimization measures also in Pizza Hut as well as KFC, which will start to yield the results from January onwards. So we are confident that as far as KFC is concerned, we will be able to come back to the margin levels that we've indicated in the past. And let's see how the Pizza Hut goes, and the expansion on Pizza Hut is dependent on the overall brand performance.
Sure, sir. Thank you. That's okay.
Thank you. Next question is from Aditya from JP Morgan. Please go ahead.
Hi. Hello. Am I audible?
Hi, Aditya. Yeah, you are.
Yeah. Hi, sir. Thanks for the opportunity. My first question is on the KFC performance. So if I look at your ADS and margin numbers and compare that with your sister franchise, there seems to be some divergence. I just wanted to understand, is this because of any region split, or are you seeing any material difference in demand trend between different tiers of cities which could be driving this?
So KFC, Aditya, as you know, our sister company or the sister franchise partner is predominantly present in the large metros because if you look at the country, I mean, they have higher share of metro cities. And we've seen a better recovery in metros versus smaller ones. You would know that they have Mumbai city, they have Delhi city, they have Chennai, which are strong markets for KFC. We've also seen similar trends. We've not seen any big divergence. It's mainly we've seen primarily the KFC numbers getting impacted in Kerala, Assam and West Bengal, which are very highly concentrated because of this geopolitical situation. And there also we've seen an improvement and a turnaround happening. So therefore we have seen the green shoots because of the geopolitical situation also turning around, and therefore that gives us the confidence that next quarter hopefully should be a better quarter from that perspective.
That's very clear. My second question is on the transaction growth of KFC. So is it right to assume that the same-store transaction decline would be lower than the SSSG?
See, the APC, which is the value piece, is holding very well. If at all, we've seen a small uptick in all of our brands as far as the APC is concerned. The decline which is currently there is primarily on account of transactions. And that's where this whole initiative on the low-cost meals and the value meals and the new promotions that Mr. Jaipuria talked about will help drive the footfalls and will help improve the situation on the transactions.
Okay. If I can squeeze one last question, can you also give a little more color on Vaango, because you've been clocking double-digit same-store sales growth over the last couple of quarters. Although areas have declined a bit sequentially in this quarter, can you explain what kind of trends you're seeing here and give more color on the format?
So Aditya, if you see, Vaango is doing well on SSSG because of the older locations, because that is how the SSSG gets calculated. The formula is 1-year-old stores, right? Whereas in Vaango also we've expanded the footprint from a number of stores perspective. And in the 9 months that we've ended, we've opened almost 31 new stores in Vaango. And you would know that new stores typically start the journey at a lower rate and then they mature over a period of time. And that is what is driving the overall ADS numbers down.
Okay, thanks. That's it from my side. Thank you.
Okay.
Thank you. The next question is from Percy Panthaki from IIFL Securities. Please go ahead.
Hi, Manish. How do you look at margins going ahead, especially for KFC?
We are in negative territory right now, but supposing we go into a minor positive territory, a low single digit kind of SSG for the next few quarters. In that kind of a scenario, do we see KFC margins at around 17.5% to 18%, or can it be better than that?
Percy, as I mentioned in the last call, we are targeting KFC to get to 19 to 20% margin at about 100,000 ADS, and we are tracking on that. It will take us a few quarters to be able to get there. But on an overall basis, we are confident that the kind of measures we've taken, and once they start to kick in and we are able to see the full results, at about 100,000 KFC ADS, we will be able to get to 19 to 20% brand contribution margins.
Understood. And these measures are more in terms of improving the ADS, or are there any measures in terms of cost efficiencies also? And if you could just little bit elaborate on them.
Both sides. It's ADS as well as the cost side. So on the cost side, we've relooked at how we deploy the labor, how do we consume the electricity. So it's basically, you are aware of all the store level expenses. So we've taken a relook at everything on a de novo basis, and we've taken some measures as a result of that.
Understood. Also, on international as a whole, what is the kind of growth that you are targeting for that piece, both in terms of revenue growth as well as in terms of number of stores for FY26?
See, Thailand roughly, as far as the store growth is, because I'm talking about Thailand because that's the largest piece there.
Sure.
Nepal is a small opportunity, as we've discussed in the past. So Thailand, we are going to be targeting about 20 to 25 store count addition, which is roughly about 8 to 9% of the stores that we have. And then on top, we are targeting a triple SG of about 3 to 4% in Thailand. So therefore, that should give about 11 to 12% revenue growth on Thailand. Nigeria seems to be kind of stabilizing as far as the currency is concerned. But right now, again, Nigeria, our objective is to stabilize the operations, bring the profit levels back because there have been huge losses as a result of currency devaluation. So therefore, Nigeria, we are evaluating the expansion, but there will be very small numbers in Nigeria if that were to happen.
Right. And is there any visibility on Nigeria break-even, by when we can hope for that? And what are the losses on Nigeria on an annualized basis currently?
So Nigeria, okay. So let's say, for example, as I said, Nigeria, this quarter we've seen currency stabilizing. So the brand contribution has come back very strongly as far as Nigerian business is concerned. So currently in Nigeria, our brand contribution sits at 20% plus.
Okay. No, I'm just trying to understand for my modeling purposes for FY26 full year versus a full year of FY25. Supposing if the losses go away, then how much of a swing in rupees crore could I be sort of factoring in for the FY26 numbers? I just wanted to understand that part.
I can work that number out for you, Percy, and then we can discuss it offline basis.
Sure.
But again, I would like to kind of talk about Nigeria. We would like to see one more quarter of currency getting stabilized and then kind of talk about those numbers.
And when you say brand contribution is 20%, would I be right in assuming that generally corporate overheads for a QSR format is about 5 to 7%, and therefore your EBITDA margin also would be like in low to at least a low teens kind of a number for this quarter in Nigeria?
Yeah, because Nigeria is a small business, so therefore the corporate G&A is little higher, but otherwise directionally you are absolutely in sync.
Understood. That's all from me. Thanks a lot.
Yeah. Thanks, Percy.
Thank you. Next question is from Jignanshu Gor from Bernstein. Please go ahead.
Hi, Manish. Congratulations on an improving performance trajectory. I wanted to double down on one question on Pizza Hut. You said that any further growth in terms of store network or investments in marketing will be dependent on performance. So can you guide us what performance markers are you looking for to get convinced of a turnaround?
So it's typically, Jiganshu, as you know, it's ADS and triple SG numbers.
Mm-hmm.
And even on triple SG, we've seen improvement happening in the current quarter. What used to be double-digit negative a couple of quarters back, we are almost at a break-even level. The industry has also seen a strong comeback on pizza, so that's how we are monitoring it. So therefore, that is what I meant.
Okay. Is there any specific ADS number that you have in your mind, or a brand contribution margin number?
We will not be able to give you guidance on that.
Sure. No worries. If I can just follow up one more. This is regarding Vaango. I think we had aggressive store expansion last quarter, which was slowed down this quarter. But if you do a broad backward math, it seems the 40 stores that you sort of added in the last 12 months are operating at far lesser capacity than the remaining 54. So is it something about the structural nature of the format which is giving you pause in expansion, or do you still remain very bullish about it? So just wanted to get a handle on that.
Sure. So Jiganshu, if you look at when you're comparing, let's say, the base numbers to the new additions, the base has very, very strong operations on the airport also. And as you know, Vaango at airport does extremely well, and that is what kind of pushes up the base. Whereas all of the new additions are typically in the food courts and high streets and so on and so forth, which operate at a lower level. Otherwise, for example, if I were to compare, let's say, like-to-like basis, it's only the difference is only about the maturity profile of a store.
Okay. And hence, is the SSSG, let's say, 9.6% this quarter, is it different for, let's say, airport stores versus non-airport stores? Is that something you would feel comfortable calling out?
It'll be similar.
It'll be similar. Okay. And lastly, sorry, just so in ADS terms, then you would expect it to sort of stabilize at a lower level than it was earlier, as the mix of stores moves towards more high street.
Correct.
Okay. All right. Thank you. I'll circle back in the queue. Thank you so much. All the best.
Sure. Thanks, Jiganshu. Yeah. Thanks.
Thank you. Next question is from Devyani Bansal from Emkay Global. Please go ahead.
Yes, sir. Thanks for the opportunity. Congratulations on reaching the store milestones. Manish, last quarter we talked about experimenting with some marketing and pricing promotions in select markets, right? So how has been the response to such initiatives, and what is the margin impact of this in the current quarter?
Devanshu, it's been a mixed bag. For example, we've seen good response on the KFC side to these promotions. We've not seen such a good response on the Pizza Hut side. So therefore, it's been a mixed bag. But on an overall basis, I think things are moving in the positive direction, and therefore we are going to be recalibrating the marketing spends from January onwards.
Understood. Sir, so just a follow-up on this. So Q3 is seasonally a stronger quarter, but the ADS is flat sequentially. So, and we have taken these initiatives where you are indicating that the response has been good. So wanted to check the reasons for a lower pickup on a sequential basis in KFC. So just your thoughts on that.
So as I said in response to the earlier question, one is this whole location thing, and then we've also seen a very strong store addition in Q3, and that also therefore, typically when you have this kind of store addition, it impacts the ADS performance because any new stores would start at a lower level.
Understood. Last question, sir. You indicated Kerala, Assam, West Bengal not doing well for us. So can you either talk about the performance on the regions outside of these states, impacted states, or if you could also, suggest otherwise the salience of these impacted states and what is the kind of improvement that we are seeing in these states?
Devanshu, we've seen a better improvement as far as triple SG performance is concerned for the states outside of these three states. These three states also have improved, and I think we have probably, let's see how the number goes as we go along. We do expect that these states also probably have bottomed out, and that is the only difference, but they are not in line with the rest of the states. Now, I think with the geopolitical situation stabilizing, we should see a better kind of picture in these states.
Any qualitatively, can you sort of indicate as in what is the difference of SSG in these regions, outside of these regions? Just to get a sense as in how things may turn up when sort of these states also recover.
See, I'll not be able to give you the exact numbers, but let's say, for example, if you look at the range of states that we operate in, I mean, on the highest side, probably the triple SG improvement sits at plus 10-15% also.
Oh, wow.
And there are states, so therefore, I mean, those are low weight stores, may not be adding so much weight, but I mean, the range is wide. So it's not just a narrow range that I can tell you and you'll be able to apply in the model.
Manish, thanks for taking my questions.
Sure. Thanks, Devanshu.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from Tejas Shah from Avendus Spark. Please go ahead.
Hi, thanks for the opportunity. Manish, my question refers to your comment that the commitment was also one of the triggers, I'm sure it was not the sole, to expand or go aggressive on Pizza Hut store expansion this quarter. So given the subdued demand environment, which you also called out and Kevin also called out in his opening remarks, I just wanted to understand how much flexibility do we enjoy on the expansion commitment? Was there an option to delay it considering that demand is still not in great shape?
So if you look at Tejas, our openings in this year on Pizza Hut are lower versus the previous year, and therefore there is a flexibility available. But again, at the same time, we are very cautious that we should not be defaulting on our agreements, and that's how, because as you know, the DA works from January to December period. So therefore, we will be now kind of recalibrating Pizza Hut as we go along.
Sure. And Manish, given the team's experience with past cycles, we are seeing first time in the listed phase. So just wanted to understand, is aggressive expansion typically pursued during downturns? Does it benefit us in full recovery cycle, or do you want to wait for demand turnaround before acceleration on store expansion? Just wanted to understand from past experience what has been more remunerative among these two strategies.
I just see it is a chicken and egg story, right? I mean, if you were to look at our experience, the way we expanded during COVID time when nobody else expanded, and post-COVID we've seen great results. So, and again, as you know, this business is not about putting up a large factory that you create a capacity and then you can utilize for. I mean, this is about, it's a brick and mortar business. So you have to create store by store by store by store, and therefore, if we miss on the real estate opportunity, it's gone forever. If we are not able to create that whole bandwidth, it's not that, for example, if I were to say that there's a downturn of 3 years and I'll be able to open 400 stores together in the 4th year, it's physically not possible. So it's a very different nature of business, and that's the reason we are kind of at it, because eventually if we all believe in the India story and we all believe that India will grow, the economy will grow and the consumer sentiment will improve and the consumption will come back, then with the new budget and whatever steps the government has taken and will be taking, we should stand to kind of gain the most.
Sure.
And we've already experienced this, as I said, we've already experienced that during COVID time.
Very clear. And the last one, if I may, in the history of the company, both for Pizza Hut and KFC, what has been the most prolonged downturn cycle that we have seen? Is this the current one the most difficult one, or there is a history of such cycles in past also?
See, in the past, Tejas, we've never had this kind of scale, right? So it's a combination of a slowdown in the consumer demand and consumer sentiment, and at the same time, we've been doing aggressive expansion also. So it's a combination of those two. Now, expansion is a very conscious strategy that we've undertaken, and we are confident about expansion because all of the expansion is happening on smaller formats where the payback periods are strong. So therefore, as we see the consumer sentiment coming back, it should greatly benefit us. But at this scale, obviously, we've not experienced things in the past because it was a smaller operation in the past.
Thank you. Thanks and all the best for coming quarters.
Sure. Thanks, Tejas.
Thank you. Next question is from Marut Chaudhary, who's an individual investor. Please go ahead.
Hello. Yes, am I audible?
Ji, you're audible, Marut.
सर मेरा पहला क्वेश्चन है कि जो अभी इस क्वार्टर रुपी डेप्रिशिएट हुआ है तो उसका इम्पैक्ट क्या होगा हमारे इस क्वार्टर में?
सो मारुत, हम लोगों की ज्यादा इंपोर्ट्स नहीं है एक्सेप्ट फॉर लेट्स से की इक्विपमेंट्स ऑन द कैपेक्स साइड. सो उसका हमारे को थोड़ा सा इम्पैक्ट पड़ता है, बट एज फार एज ऑपरेशंस आर कंसर्न्ड और उसका इम्पैक्ट इवेंचुअली डेप्रिसिएशन में आता है. बट अदरवाइज ऑन रॉ मटेरियल साइड, पैकिंग मटेरियल साइड, हम लोगों का जो इम्पोर्ट स्ट्रक्चर है वो बहुत छोटा है. सो देयरफॉर उसका कोई इतना इम्पैक्ट नहीं है. ऑब्वियसली बिकॉज ऑफ द करेंसी, द इंटरनेशनल ऑपरेशंस आल्सो गेट कंसोलिडेटेड, उस पर इम्पैक्ट आता है. But that's only a translation effect rather than a transaction effect.
अच्छा, ओके. एंड नेक्स्ट इज जो हेल्थ टैक्स अल्ट्रा प्रोसेस्ड फूड्स जो अभी मतलब बात चल रही है, तो हम कोई हेल्थियर ब्रांड इंट्रोड्यूस कर सकते हैं अपने पोर्टफोलियो में, ऐसा ही हम लुक कर रहे हैं बाहर?
So if you see, Wango is a healthier brand in our portfolio. South Indian brand is supposed to be the most healthy food in the country. So therefore we already have that portfolio. Within KFC also we have a range on the while our dominant range is fried chicken, but we also have grilled chicken available. Similarly on the pizza, so therefore we have a good balance. Even the newer brands, for example Sanuk Kitchen जो हमने sign किया है, it is a healthier brand versus the other brands that we deal in. So therefore Sanuk, again we are going to be positioning on that basis. So we are conscious of what you are saying, and that is part of the strategy.
Okay, एक और क्वेश्चन अगर मैं पूछ सकूं तो, जैसे कॉस्ट ऑप्टिमाइजेशन के बदले जो ग्रॉस मार्जिन एक्सपेंशन हमारा केएफसी में होना चाहिए, मतलब कोई इंट्रोडक्शन के थ्रू, जैसे यम चाइना ने केएफसी कॉफी निकाला, उनका ग्रॉस मार्जिन बढ़ा, वैसे इंडिया में बीके कैफे ने, बर्गर किंग ने अपना बीके कैफे निकाला उनका. तो हम क्या केएफसी में भी देख सकते हैं, जैसे यम चाइना ने केएफसी कॉफी निकाला, हम भी यहाँ ये इंट्रोड्यूस करके देख सकते हैं? क्या आपका क्या?
So Marut, we have introduced and we have experimented with KFC coffee in some of the outlets. Now obviously this is a different strategy versus let's say what McDonald's is doing by way of McCafe or what Burger King is doing by way of BK Cafe, because they operate large stores and therefore वो store में they are able. Whereas हमारी strategy है to bring the formats down, to focus on the core, to make it more efficient on the paybacks and the margins, and that is how we are operating. Because if you see over a period of time, the trend in the QSR industry has been more and more home consumption. And that you would have seen with all the brands, if you were to look at last, 3 to 4 years, even post-COVID also, the home consumption is going up for the entire industry, it's going up for all the brands. And therefore, in that scenario, we are highly focused on the format of the store rather than large formats.
Okay, that's it from me, sir. Thank you.
Sure. Thank you so much.
Thank you. Participants who wish to ask questions, please press star and 1. Next question is from Latika Chopra from JP Morgan. Please go ahead.
Yeah, hi. I wanted to check with you on your thoughts around this quicker 10-minute delivery, platforms, which are announced by the leading food aggregators. How do you view this? Is this something which is feasible for formats that you run? Do you see this as an opportunity or a threat from a snacking perspective?
See, typically what they are talking about, Latika, is all around the snacking platform, right? And those snacks are typically ready-to-eat snacks. always existed. So let's say, for example, typically in any Indian household, any quick eating snacks are always part of pantry. So therefore, the way we look at it, as far as fresh food is concerned, there is a cooking time and there is a delivery time. Although we are also in discussions with one or two players in terms of how can we participate and experiment. So, for example, let's say just to give you as to how the dynamics work, take the example of Pizza Hut. Now, Pizza Hut, the pizza is prepared after you get the order, and the preparation time itself is about 7 to 8 minutes, or depending on the pizza, it could be 9 minutes also. And then you have the delivery time. Whereas if you look at a brand like KFC, KFC operates on a ready-to-eat basis, and therefore KFC can easily participate in that journey. So we are in discussions. We will be experimenting with this. Let's see how it goes. There could be some menu items which can always participate in that whole 10-year journey, but let's see how it kind of shapes up.
Understood. The second bit was just trying to check if there been any change in, your agreements or any kind of inflation you've seen with any of the aggregators?
No, not yet. So the discussions are on, because obviously there has been a pressure from the aggregators, but so far we've managed to hold, and it's fine.
All right. And the last bit I just wanted to check was on the 3 QSR brands that you're planning to bring and launch in India. The timelines remain from April this year onwards?
Yeah, we are on track from quarter one of the next financial year.
Great. Thank you so much.
Thanks, Latika.
Thank you. The next question is from Aliasgar Shakir from Motilal Oswal Mutual Fund. Please go ahead.
Yeah, thanks for the opportunity, sir. Just a question on the, little bit on the outlook. So, as even Tejas was asking, this has been a little longer cycle of, weak environment for us, and we've seen nearly about close to 8 to 10 quarters of, weak outlook. Now that you are hinting that there is some recovery, just if you could, give a little more pointed clarity in terms of how is the situation on the ground. Are we after 2 years of negative days thinking of flat SSSG, or you think that things can improve from here? We are talking about a positive SSG in the next couple of quarters, and what kind of margin do you think? Will it take time for you to come back to the 19-20% margin that you have mentioned, or if we do the 5-10% kind of SSG bracket, then we should be able to reach that kind of margin? Thank you.
Sure. So Ali, as you're seeing the numbers of the QSR industry, and we've seen that kind of turnaround happening with almost all the brands. We've seen that in our numbers as well, and that gives us the confidence that maybe things are turning around. As we've said that we've seen, let's say, for example, quarter 3 is a festival quarter. We've seen bigger throughputs happening on those festival days, which again is an indicator that the consumers are opening up their wallets. So therefore, triple SG turning around is one of the paramount factors to be able to make sure that we kind of come back to our original margins. Irrespective of that, we kind of took the steps in the previous quarter. We've seen the impact of or the results of those steps coming in the current quarter. So we are confident that, as I said to Percy's question, that about 100,000 KFC ADS, we should be able to come back to our original margins of 19-20%.
And the current quarter, are we seeing signs? Because I'm just asking from the point of view that, there's 2 years of negative days. So on this base, are we seeing signs of SSG bottoming out in the current quarter?
It's been a mixed bag because as we operate in multiple states and there are multiple kind of factors impacting various states. But now with the budget coming in, with the geopolitical situation stabilizing, I think we are hopeful that things should kind of turn around.
Understood, sir. Very clear. Thank you so much.
Okay. Thanks so much.
Thank you. Participants who wish to ask questions may press star and 1. As there are no further questions, I'd now like to hand the conference back to the management team for any closing comments.
Thank you very much. We hope we have been able to answer all your questions satisfactorily. Should you need any further clarifications or would like to know more about the company, please feel free to contact our investor relations team. Thank you once again for your interest and support and for taking the time out to join us on this call. Thank you very much. Bye.
Thank you very much. On behalf of Devyani International Limited, that concludes the conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.
Thank you very much.